Kuwait, we have an extraordinary guest joining us. Ramki Ramakrishnan of wavetimes.com joins us. He's also the Assistant General Manager at Ahli Bank of Kuwait. But at the moment, joining us as Ramki of wavetimes.com. Ramki, thank you very much for joining and stopping by. This is an unscheduled stop for you, I know. But, stopping at the lowest point in 2015 and ending at that lowest point today, is this opening the floodgates for big losses on the Nifty?
Yeah, hi. Thank you for having me again. A few weeks ago, we discussed this support around 7980 to 8080, from where we anticipated a recovery. While that recovery did happen, the personality of the bounce was a clear giveaway that this complex correction has not been done. And I have now reassessed this whole scenario, and I think that any recovery from now to perhaps to 84 levels, 8400 levels, is a time for the short-term traders to exit their long positions in the Nifty and any weak stocks that they may be holding, because I think that we have moved down to perhaps around 7750 to 7680 as the next level, from where we will get a recovery again like the last time. So look at 7750 to 7680 as your next level to buy. And the way that recovery happens will tell us whether that's the fifth wave up, which we have been looking for. That up move is bound to come, but I now think that the up move is going to happen from those lower levels. So any interim recovery, I think, will fail around 8420 levels.
Hi, Mr. Ramakrishnan. Thanks so much for joining in this afternoon. So for a trader who's sitting on long positions, you said that you will advise them to book out currently. But for a trader who wants to get into the Nifty now, do you think he can go ahead and short after such a big correction? I think we've seen 500 points just in the last 7-8 trading sessions. Is there a shorting opportunity currently?
No, exactly as you pointed out, when such a big move has happened in a short time frame,
right,
we will inevitably get a short covering rally.
Right. And
I would recommend to wait for that rally, perhaps towards 8400, to establish new shorts. And of course, with always, as traders should have nearby stops and not turn that into long-term positions which will sit there forever. So wait for that recovery and sell, because the right way to trade any market is to get into key levels and not get into the market at drop of a hat. Or just because somebody is seeing a move has happened, we cannot go and sell after the current move has happened. So either you buy it at around 7680 to 7750, in which case you can sit on it for a couple of days and it will come back and perhaps go well into profits. Or if you see 8420 happening in the next 2-3 sessions, you can sell there, because it's bound to come back and retest this low and perhaps break it, because the market is telling us that in the near term it's not ready to go up. And we should listen to those signals.
Okay. What will be the leaders of that sell? What takes you strongly to that 7700 mark that you are talking about?
7750 to 7680, yeah.
Okay.
I can't tell you what these leaders will be, but
would it be the banks? Would it be, Tata Motors?
Let me talk about Tata Motors, because you talked about the leader. But I don't know if Tata Motors is a major component, but a lot of traders would be looking at that stock, especially because it is now retraced about 38.2% of the last recovery from 136 low seen in 2011 all the way to 606 in February 2015. That big rally has been corrected today almost to the 38.2% level.
Yes.
And there will be lots of traders wanting to buy that type of a Fibonacci retracement. I would like to caution them that that would not be a wise move, because any recovery is not going to last for long, and we will probably go down by another 10% in that stock, down to perhaps 385 to 370 level, and only over there I would venture into that stock, for example. I don't know, I can't throw out names like some of our learned guests have been, because they are always watching the market. But I do look at specific stocks, and since you asked about the banking stocks, tell me, which stock would you like me to talk about?
No, I'm just asking you if the banking stocks will take you much lower, ICICIs or SBIs or HDFC.
Okay, ICICI, yeah. Let's talk about ICICI. I think it's currently trading around 288, right? 287 and a half.
Yes.
There is a high, if you go back to 2010, there was a high at 256. From that level, that stock had halved in price. And then on the next recovery, it went to 248 in May 2013. And once again, from that high, it lost 40% of its value. These two peaks would form a sort of a cushion on the way down.
Okay.
And now that we're coming off with a high of 393, I think we will see some support showing up initially just below 270. But even that recovery may not last for long. But if it gets down to 255 levels, which is just above the levels which we discussed now, the prior tops, when it gets near the 255 level, I would be interested to invest in it for the medium term.
Okay.
All right, Mr. Ramakrishnan. In fact, ICICI is the big heavyweight on the Nifty. It has nearly around 5.5 to 6%, while Tata Motors, the other stock you're talking about, is nearly a 3% weightage on the Nifty. But let's talk about the IT space then. What about something like an Infosys? That one as well, normally we see at some point of times, it's a bit of a contra buy. What's the levels you're looking at in terms of Infosys?
You must forgive me because I hadn't looked at Infosys. I don't watch the Indian market day by day.
All right.
I'm a medium-term investor. I look at key stocks. I can tell you something about SBI since we're talking about banks.
Yes.
If that's of interest to you.
Yes.
Definitely.
Okay. I had looked at it this morning, and clearly a five-wave move. I talk in terms of waves. The market always unfolds in 5 waves up and then 3 waves down, and then again 5 waves up. So a 5-wave move has happened from the 2013 low of 145, August 2013. Of 145, we went up to 336 in June 2015. I can see a clear 5-wave pattern has been finished there, and therefore that needs to be adequately corrected. Normally, technical analysts look at a 61.8% retracement. That comes at the 218 level. We are now around 254. So I think you might get a recovery. If it dips to 240, 245, you might get a recovery. But I think that will run into trouble again at 275.
Okay.
And then we'll head lower again to 220.
Okay.
So wait for 220 if you want to buy SBI.
Okay.
And in the meantime, if you've gotten some stale longs, if it gets to 275 now, you may want to maybe lighten up your position and bring it back on board when we get to 220.
All right. Mr. Ramakrishnan, thank you very much for joining us with your views on those 3 top index stocks and for preparing the market, as it were, for that 7750, 7680 kind of levels that it might touch.